Hello guys, so my name is Gavin. Welcome to M Trading's webinar. This is a live webinar taking place through M Trading. This will also be recorded and you'll be able to view this multiple times through our M Trading resources such as YouTube and M Trading website. So the aim of today is to discuss and to decide how do we come up with trading ideas. So how do we go about trading ideas? How do we place stop losses? What is a realistic target? And what is risk management? Yep. So risk management on its own is a very important topic in trading. So that I can go into more detail a little bit later on a separate webinar. But I will discuss more about risk management to our trading idea. So let's begin. So as we've covered from our previous webinars, which is more about candlestick analysis, looking at support, resistance, trend lines, how to look at multiple time frames, duration, and so on. So we're now going to put it all together and come up with some trading ideas. So let's have a look at a few assets today. Ideally, I want to get through 2 or 3 assets, but it also depends on how long it takes us to do our analysis, and if we have any potential trading setups that we can take straight away. One thing I would want to mention straight away is that it is not often you will find a trading setup as soon as you've completed your analysis. Yep. So patience is required to trading. Ideally, what you want to do is do your analysis and wait for those high probability setups. Okay, so let's begin. So there's a lot of discussion currently going with the euro dollar and cable. So let's go through these 2 major assets. Okay, so the first thing I want to do is select my major time frame. So I'm looking at the major time frame. It's a higher time frame, which gives me an idea of what the overall trend is, what the overall trend direction is, and also marking out key levels. Okay, so I'll start with the daily time frame. So daily time frame gives me a better understanding of what is taking place within this asset. At the same time, I'll be looking at specific candlesticks also. But remember, candlestick analysis does come down to your base and your minor time frame. So first things first, we start off with support and resistance, but just highlight key areas. What I like to do is specifically on assets when they have such a large distance, so large range, I would highlight specific price levels. So we know that this high here. So does anyone know what this high is? Where was this high from? Okay, so I'll let you guys know. It is the beginning of Brexit. So just before Brexit, we had this bullish uptrend. We had a bullish uptrend over here, and then we have the Brexit high. The Brexit high, and then we had a significant sell-off. Look at that sell-off. One of the largest candles in total. Yeah. It gets down to a low, so we're looking at a low. So let's add in another price label. Down to this low here. So put it there. So from the 150.25 level, we move down to the 127.90 level. It's a significant move, and through this low, what we tend to see is the market ranging. So this is more of price action range taking place here. Yep, so we're not making no new lows, so we don't make a lower low. We don't either make a higher high either. So we can see that equal highs and equal lows. This area shows me an area of consolidation. Remember those keywords, guys. Consolidation. We are ranging. So I can potentially place a resistance level just above these highs. So that is my initial resistance level. Yep. Remember, we require 3 touches to our resistance level for it to be confirmed. So let's check that. So we can just check that by using some of our tools over here. So we've got one over here at this point. Let's use another one, our second one in this region, and our third touch in this area here. Yep. So we have our 3 touches, so it is a confirmed resistance level. Yep, so this resistance level is at the 134.57 level. Okay, we can see how we broke through, retested, then go on to make a new low. And you got to remember, guys, that the smart money in this area is selling the rallies. Their aim is to continue that selling pressure. Yep. So we have mostly retailers will be actually buying at these dips, at these lows, but the smart money are still quite negative with this asset. Purely the fundamentals of Brexit. Yep. So we've had from this high, so after these three touches, we had a significant sell-off. This sell-off takes us to a low of, if I just now put a price level, yep, so 119. So we do break through that 120 barrier, 120 handle, and we get down to 119.15. So that is an extreme low, especially look at this candlestick. And this was actually a flash crash that took place. So there was some overnight selling, and that was in Japan. In Japan, someone placed a significantly large order than they were meant to, and that Intel allowed other traders to get in on the bandwagon, and then all the high frequency algorithmic machines also jumped in on this asset to sell, to short this market, with a significant sell-off at this point here, reaching this low, which hasn't been tested since. So it hasn't been tested since. Yep. But if I place the support level, I'm not going to place my support level at this extreme low. I want to place it where I see multiple touches, where I see there is more of a level. Again, that is my support level. So this is my support level currently. Yep. And the reason being is, how many touches do we require? 3 touches, guys. Yep. So again, let's check again. So got one there. We have our second here, even though we have a false breakout, but you can see this area here was being respected. So these candlesticks you can view at the bottom here, almost indecision just around that price level. We had a gap, so we opened lower, but it retraced significantly. So that recovered. So I wouldn't say it was too keen on staying below this price level. Yep. And then also we have our third touch. That is our third touch, a very confirmed level there. So what has happened since? So if you look at the fundamentals, try and you have 2 choices, guys. You can look to understand the fundamentals, and that is usually giving you an understanding of what the cause is in the market. Yep. Or you can look at a technical analysis on its own, which is usually the effect of the market. So you're able to see the effect taking place on price action. Yep. But ideally you want to use a mixture of both, depending on how strong you are with the fundamentals, but you should incorporate fundamentals and technicals to your analysis. Yep. And fundamentals is something that takes time. It does take a lot of experience and reading about the markets to have a better understanding of what the sentiment is behind certain actions that take place by heads of banks, by government policy, whatever it might be. Yep. Okay, moving on from there. So we're now discussing from this point onwards. From this point onwards, we want to look at what's taking place in price action. So yes, there was if I take a very short-term lower highs, so we can see, if I now place a trend line from this high to this high, there we go. So we're seeing lower highs in this place of within this price action range, even though we're hitting a low and testing the same low, but the most recent bullish momentum that takes place to push it up to these highs was not able to test the previous highs. So the sellers were getting in earlier until we have this breakout. So that is our initial breakout. So this trend line, if I now just extend this line, something similar to that, and then what I'll do is adjust that trend line. So I don't need that to extend. Yep. Okay. So we had a short-term downtrend, and then we had the breakout, and the breakout normally suggests a trend reversal. So that is what we're that's what we're going to analyze next, is do we go on to reverse? Yep. So I'm looking for a series of, what would I be looking for, guys? You should know this by now. If you're looking for trends, if you're looking for an uptrend, you're looking for a series of higher highs and higher lows. If it's a downtrend, you're looking for a series of lower lows and lower highs. So by placing a trend line from the lowest low and expanding that line, so extend that line to the next low, this is where we are now. So currently we're looking at our third potential touch here, which has actually broke through. So this has actually broke through that trend line. So the trend is not intact anymore. So there is a potential trend breakout. Yep. So this is the type of analysis that I'll be doing on this time frame. Yep. Then let's go on to our base time frame. So the base time frame is where we do our detailed analysis and look at a potential trade setup. Okay. So when going onto that daily, onto our 4-hour time frame, so when the daily time frame for our major, on the 4-hour time frame, we'll be looking at our base time frame, and we're going to be viewing this much price action. That is all I need to view from there on, is this price action. Okay, 4-hour time frame. Let's zoom in. So we've done all this analysis. We know what's going on over here. We've seen that this was showing lower highs, as you can see. We'll keep moving. We'll keep moving. We broke out. There was that breakout, gone on to make a new high, and we had this retracement back to the low, and then our next high, and then we're looking for that another retracement back to that trend line. So we're here. So this is where we are currently. We're within this price action range that has gone on to break through. It's gone on to break through that trend line. And it's quite an impulsive breakout. So we can see that price action was in a range within this in this area here. Yep. So first thing I want to consider is from that low to this high. Yep. I want to see what is my Fibonacci telling me in percentage terms of that retracement. So if I take that high from that low to that high, I may need to adjust this Fibonacci so that we're able to see this. I need to select a different color, maybe add a different thickness to this, and that will do. There we go. Oh wow, so as you can see from this, yep, just by adding a Fibonacci, and what is the Fibonacci there for? It gives me an idea of in percentages. Yep, so if this is from 0 to 100% move, how much of a retracement is likely to happen? So if I see a retracement back to a 23.6% level, so this is 23.6% retracement from that high, and then I'll start to see a bullish move from there, then it's showing me, okay, the trend is significantly strong. There is a lot of buyer's momentum. Yep. But the golden ratio, the key ratio level to be aware of, is the 61.8. So that's 61.8%. So once we see a retracement to this area and we break through that level, we can pretty much view this as a high probability that it will go on to back to the previous lows. Yep. So not only do we have this fib level intact and it's been broke through most recently, but look at the previous touches. It stayed above that level. And also the previous price action move higher also respected this on that retracement. Yep. So from this move higher, that retracement respected this level. So I'm already seeing some important breakout levels taking place there. So the first key indication is the break of the trend line. The second is we broke through this significant support level. Yep, so remember that the 61.8 also represents as a support or resistance level. Yep. Another thing to add to this is you need to be aware of these spike lows. These spike lows can easily stop you out. So I'm going to put a horizontal level. So we're going to put a support level at this range here. And look where price action is currently. It went down to test this level, and now it's currently retracing slightly. Yep. So my idea at this point now is that we've had the trendline break, we've had the Fibonacci level break, and we're testing this previous low here. So I'm potentially looking for a short position. Yep. So I'll be looking for a potential short position when we break through this level in this region here. So once we break through this support level at 128.11, this is where my entry point is. And at the same time, I'll be looking for a potential stop loss. My stop loss, I want to be above this level, but being above this level is not enough, guys. That is a key point. Yep. Even though that we've seen this is the breach level. Yep. So let's assume, let's take this level here. So if I take it from this zone down to this area here. So we can see that this zone here is my breach level. This is where price action, what I'm looking for in price action to breach before I can take a trade setup. Ideally, your stop loss is not placed within that breach. That is not correct risk management and the correct technical place to place your stop loss. Yep. The idea is you now need to find where does that selling pressure or buying pressure begin. Yep. And in my view is you look at this impulsive move down. Where does this impulsive move begin? From this high. So you can see that this candle here was what started that downward movement. This was that institutional investor, the smart money, the big boy trading and pushing the market down, and that continued up to this point. So if we continue this momentum, I'm viewing this is where the selling pressure begins. So ideally my stop loss needs to be placed above this level because this could easily test the level, break through, slight false breakout, and then retrace, retest these previous highs, and then that same smart money institutional investor can come back in and short the market again. So that's the key point. Your stop loss is placed on the other end of where that buying or selling pressure begins. Yep. So we're viewing it, my idea is in this region here. So my stop loss will be placed in this region here, my entries at this point, and my potential target, it's easy. I've redefined a target level. By taking my fib level from this low up to this high, that is the most recent low. Yep, so I'm taking it down to the previous low. I'm not going to zoom out and say, for example, if I just now zoom slightly out, let's remove, let's cancel that. Let's dial this in a little bit. So just by taking a breakout at this point, I'm not now going to say I'm going to target back down to these lows. That is unrealistic targets. As you expect in the markets to go to the moon and back. Yep. Ideally, what you want to do is set the next realistic target level, which is that previous low, this region here. Yep. So let's zoom back in. Let's go back to where we currently was. Let's just adjust the screen a little bit. Right. So this is where I'm looking at now. So I'm looking to set a target back down to the previous low. Ideally, you are not looking to set a target at this level. You're not looking to set a target at this level or just beyond this level. Your target's always set within that level. You can even be a little bit cautious. You can be a little bit cautious that if you see, okay, this may be an extreme low, there is a low in this region here and that region there. This is the range that you would view as a potential target level. So our target level can be potentially in this area here. And that is my setup, guys. That is me doing my analysis on my base time frame, doing detailed analysis and forming my trade idea. At this point, our next step is to check our risk to reward. Yep. So how much am I going to risk to achieve what amount? Yep. It depends on you whether you're looking to risk $100, yep, or risk $500. That all depends on your account size and what percentage you allocate for each trade. So the norm, so industry standard is 1%. So 1% of your account is what you allocate to a potential trade setup. So if you have a $50,000 account, then yes, $500 is 1%, or $100,000, then you look at $1,000 as your per trade risk. Yep. But this, in the same way, you would also want to understand that if I take a trade entry at this point, yep, and if I'm looking to risk, so currently we could see this is, so let's just go into that. That is in the region of 122 pips there. Yep. So that's 122 pip stop loss. My potential target is close to 174 pips. So I'm looking to achieve 174 pips and looking to risk 120 pips. So just by knowing that, I am achieving a better than a one-to-one risk to reward. Yep. The idea is the minimum you should take is a one-to-one. So if you're looking to risk $100, you're looking to achieve 100 as a minimum. It doesn't make any sense to risk 100 to achieve 20, because then if you have 50 trades and you have only a 50% hit rate, but you're only achieving 20 but losing 100 with each of those trades, yep, you're still going to be not profitable. So even with a 50% hit rate and you have a 2-to-1 risk to reward, yep, so you achieve double the amount that you risk, you are likely to be profitable at the end, even with a 50% hit rate. So that is the key point there. So moving on from there, if I just have a quick look, so let's just go back to our crosshair. Right, so from this level we know it's around 120 pips and our target is 170 pips. The idea is we cannot take a trade if the trade was any less than 120, which will be in this region here. Yep, if you look at your target, say 87 pips, as we can see over there, no, I would not take that trade. I have potentially missed the trade. I was too late to take this trade. Yep. Okay, so we know now that for risk management, this is a great setup. This is a potentially great setup that I can take. The next point is we move to that lower time frame. We move using the rule of 5 to our minor time frame, where we do our candlestick analysis and time and execute our trade correctly. So in this purpose, we're going to use the 1 hour time frame. So I'll just go right there. Okay, so what we can see at this point is that we've gone on to retrace from this level. So I'm looking for the next loop around. Yep. So we can see this low, that low, that low, even this low. So we've got quite a few touches in this region here. Even the initial movement halted in this region here. So we know at this point there were strong buyers at this level. Yep. This can at the same time turn into resistance. So what we could potentially look for is either resistance here. So when price action gets to this level, we resist this level. So we have more selling pressure. Selling pressure overcomes that buying pressure, and we have a move lower. But even if that doesn't happen, we can look at this area here. So if it comes back to test that uptrend line, retest that area, and then move lower, that is what we'll be looking for. But our potential trade setup is to take a short. Yep. So I'm looking for price action, looking at candlesticks moving up to an area in this region, some indecision candles to take place, and then a impulsive candle that breaks through this level and is within this zone here. It's within my buying, well, in this case, shorting, within my shorting zone, so in my selling zone. Yep. And that is the way you would go about your analysis, guys. Yep. Moving on this minor time frame, you will stay on this time frame and just wait for that potential setup and monitor those candlesticks and try and execute that trade so you do achieve that higher reward for the risk you're taking. Okay, so that's one potential setup there, guys. So let's go into euro dollar. So remember that there is correlation. Yep, so there is correlation. Our base currency is the euro here, and our base currency is sterling for cable. Yep. Our term currency is the dollar. So if we're seeing this move down, what does that mean? That means that there is sterling weakness and dollar strength overall. And that should be the same with euro dollar. We should be seeing euro weakness and dollar strength, and another downtrend. Yep. So let's go back to that daily time frame. Daily time frame. We know overall, if we look at the bigger picture, yep. Bigger picture is what's taken place in this area here, guys. What was taking place in this area here? Does anyone know, guys? Does anyone know what is taking place in that area there? Right, so let me just go into it now. This is also fundamentals. So this is me using my fundamentals and technicals to have a better understanding of how this market has moved. So there was an area where we had French elections. We had French elections take place, which was very, there was a lot of uncertainty taking place. There was uncertainty taking place, especially as it is a euro-based country, and it's a very dominant country for the European Union. Yep. So I'll be looking at those French elections had a key instrument to this driving, this drive move up towards these highs. Yep. So let's highlight some key price levels. The first I'd be wanting to know is the low. Again, let's look at this low. This low got down to 103.42. And then we trended a little bit higher. This is when we viewed that Macron was likely to beat Le Pen. Initially, we saw a gain, a momentum in Le Pen being able to get into the French Parliament. Yep, so being elected as the French president. But then towards the latter stage of the elections, we saw Macron win substantial votes, and he was performing a lot better in polls. Yep. So from this point on, we saw a bullish move that took place. Again, let's find our area of support. Our area of support is in this range here. Yep. I'm not looking for the extremes. I'm not looking for the extremes in this case. This was an extreme price level, but I'm looking at these touches over here. I have multiple touches staying within this range. Yep. Most of these are wicks. These are mostly wicks with a little bit of a body through that level, which straight away gets rejected. And here, it does test this level, and when it closes impulsively for the sell side, as you can see with this red candle lower, straight away the next blue candle is an impulsive candle higher. That is when the actual buying pressure begins for this upward movement there. Yep. So this area here is a very strong level. But if you want to incorporate these wick lows, which I tend to do, is have something like this. So create a zone. Yep. My first key price level I need to know is that 105.66 level. But this zone gives me a better indication of, okay, I want to stay away from looking to buy or sell within that zone. Yep. So I'm not looking, if price action gets back down to this level, if we break through it, I'm not looking to sell until we break through these wick lows also. Yep. But since we saw during the French elections that we had Macron won the French elections, he's the new president. He was extremely he has very good connections with the capitalists of the European Union, and he's extremely pro-banking, pro-investments. Yep. So that's also very important. Going on from there, since that point we had just a significant trend. Yep, so from that point we had a significant trend that's taken place, something similar to this. Now how impulsive is that trend, guys? Just look at that. The gradient of this trend, it's at significant momentum high. Yep, that is a very bullish move to the top side. Yep. At the same time, there was dollar weakness. So if we look at the dollar chart, there was dollar weakness on the longer term. But in the shorter term, in the last few days, we've seen positivity out of the dollar. Yep. When it has held a significant support level. So yeah, we got 1, 2, 3 touches. We've got 3 touches. Remember, these price levels and your trend lines have to be supported by price action. So again, we've got 3 touches in these in this area, but recently that momentum has gained even further. We can see it doesn't come back to retest this zone, retest our trend line. It continues higher, getting to a high. So it gets to a high. If I put a price level at this high there, 119.10. Yep. So we're at 119.10. From there on, this is that downtrend that's taking place. So weakness in the euro, strength in dollar. Yep, in this zone over here. So ideally, your view should be is to go long. So you have the opposite view to cable. So cable, you are looking to go short as we've broken that trend line. But in this instance, my view still is bullish. Yep. So this is the analysis I'll do in that major time frame. I would also highlight that the high. So the high would be important at this level here. So I'll take that high. So that high would be important, knowing that, okay, that could be a potential target level, or if we break through it, a potential entry, a potential long position could be taken at that point, being at this high. And try to incorporate previous price action. Yep. We can see that this is that market range that we've been in for quite a while now. So we discussed this before. This point, I'll take these highs. Yep. So this has been intact since December 2014, this market range. Yes, in the shorter term, we do have trends within, but this has been in that consolidation zone since 2014. It's only now broke out of that zone. But do we go on to assume that, okay, I can take this trade and potentially target those highs? That is unlikely. Again, do not shoot for the moon. Yep. The idea is take it trade at a time. Trade at a time, or set multiple target levels. Set multiple target levels. So if I take that as one level, so this key point there, and then in this zone here, and in this zone here. So I've set multiple targets. When we get close to this level, then yes, I can extend that level to the next one and wait for price action to break through. If it doesn't break through this level, and I've extended the line, it's showing me some rejection, then yep, close the position manually and take profits. Yep. So yep, look for the upside, but do not just set one target over there and just let it run. Okay. So now that's my major time frame analysis done. Yep. The idea is now to move down to, say, a 4-hour time frame. So we're going to move down to our base time frame, do a bit more detail. So we need to do more detailed analysis to understand this asset better. So this is that drive higher. So that's the drive higher. The low being in this region here when it comes back to that trend line. And again, I can use my Fibonacci. Use the Fibonacci tool from that low, extend it to the high. So I'll just get this spot on there. Okay, so you can see we're holding the 23.6% level. So we're holding the 23.6 level, had a couple of false break through this level, but we haven't seen a continuation take place at the moment. Yep. At the same time, lower low, lower high, lower low, lower high. So highlight these areas, guys. You should know that, okay, being at this high level, we've gone on to make this low, that is the next high, that is the next low, and that is the next high in that range. So straight away we know this is a downtrend. Lower low, lower high, lower low, lower high. We're waiting for that next lower low to take place, or a bounce off when we break above this previous high. So the idea is either we bounce off the 23.6 and then go on to make a new high and break these previous highs and then take a trade, or we could be looking for a rejection, so a rebound off our trend line. Yep. So our idea is right now I can't do nothing. So in this instance there is no trade to be taken. Yep. The aim is I've done this analysis and I should now continue to monitor this trade, monitor this asset, and wait for a potential setup. Yep. Already I have an idea. I have an idea that I'm looking to go long. I'm looking to go long, and from there I will look to place a stop loss below my trend line. So I want to stay away from my trend line to place my stop loss and look to buy anywhere when we're close to that trend line. That is the key point there. Yep. But for now, there's not much I can do, but it gives you an idea, guys. This gives you an idea of how to go about your analysis. Yep. How to go about your analysis. At the same time, I'll be also looking to go to the 1 hour time frame just to view these candlestick analysis over here. So do some candlestick analysis. See how much selling pressure is there, and compare that to, is there a lot of buying pressure? Are we on the verge of seeing a potential reversal? Going back to that 4 hour time frame, you may also place a trend line. So just place a trend line from this high to the most recent high, something similar to this. So that is now seen as my counter trend line. So we will probably stay within this counter trend line, wait for the pending breakout of the counter trend line, because it's already broke out previously. So it's broke out in this region, so that impulsive breakout, but then straight away it gets rejected, comes back within the range. I wouldn't take a trade based on the counter trend line. I would still require a break of a previous high. Yep. But I still would have this counter trend line in place, because if it comes back lower, comes back to the counter trend line, respects it, and then moves down to the trend line, and then we have the breakout, then yes, then I can say that, okay, it's been respected again. We've only had one false breakup, but we've got 1, 2, 3 touches to that counter trend line. Yep. The idea is to add confirmation to your trades, guys. Add confirmation to your trades. Okay, so that gives you a better understanding of looking at different time frames, and what type of analysis is required. At the same time, how to form trade ideas. So forming trade ideas, where do I place my stop loss, and how do I set a potential target? At the same time, we also spoke about risk. Yep. So what you should be looking to risk on your trade account, along with allocating your risk to that reward. Yep. And keeping it at a minimum requirement of a 1-to-1. But the ideal requirement is a 2-to-1 risk to reward. Okay, guys, that's it from me for now. I will be doing another webinar next week, Tuesday, same time, same place, and that's when we'll be going into secondary indicators to understand more about secondary indicators. But for now, take care. This is Gavin signing off from M Trading. Have a good one. Take care, guys. Bye-bye.